Thank you, Naveen, and it's rare for a regulator to get a round of applause this time in the morning, so thank you very much. It's a pleasure to be here in Singapore exploring some of the pressing issues our society is facing today, and particularly AI. I'm Sheldon Mills, as Naveen said, Executive Director of the Financial Conduct Authority. We regulate financial services sector in the UK, often seen as a conduct regulator, but actually we're also the prudential regulator for a good 50,000 firms. As a regulator, I haven't come up with any slides, so it's just me, and I'll try and make it as entertaining as possible, whilst give you something to think about. I always like to start with, where things start, and the idea of machine simulating human intelligence isn't really new. The term artificial intelligence was coined by computer scientist John McCarthy in 1956, where he defined it as the science and engineering of making intelligent machines. And it's captured the imagination of engineers, futurists, and writers of science fiction. I'm a fan of some of that. So if you want to discuss that afterwards, let me know. And for many decades, it has remained just that, an imagined distant future. But what most of us didn't really anticipate is how sudden advances in AI are going to change how we live. I bumped into somebody from NVIDIA at another conference recently, and when he explained to me that the compute or the computing power was pretty much half-life at the moment and could accelerate, that was when I suddenly realized I needed to go back to the office and think very quickly about the risks of AI. The tasks and decisions for which previously humans were accountable and which made human intelligence unique can now be effectively operated and done by machines. I also thought about ChatGPT and thought I might get it to do my speech, and it might be a lot more interesting. Let you be the judge of that. People are concerned. Society is concerned. And when you're a regulator, you work for society and for the public. And a starting point for thinking about regulation is whether people are concerned. And polling by the Pew Research Center suggested that more than half of Americans are more concerned than excited about the use of AI. I do remember Y2K. I don't think people were as concerned about Y2K as they are about AI, but who knows? I can't remember the surveys from that time. Of course, I was just 5 then, obviously. AI's power and pace, and the pace at which it scaled up, surprised even their creators. And that's prompted a joint letter from those creators calling for the safe and responsible adoption of AI. There's a lot of global regulatory interest in AI. And we did have the Bletchley Declaration in the AI Safety Summit, which Rishi Sunak chaired and brought together leaders from across the world. There are a few things which flowed from that. One was that we need to really understand the risk and the opportunity of AI, and that needs to be evidence-based, scientifically based, and there needs to be collaboration across the world in relation to that. And I think, Rishi's not having the best time at home at the moment, but I thought that was a really good way of showing what the UK can do to convene people on important issues as this. But it's not just the EU at all. A fortnight ago, it's not just the UK at all. A fortnight ago, see, I haven't really left. A fortnight ago, the G7 has published its principles and a voluntary code of conduct for developers of AI under the Hiroshima AI process. In the EU, as Naveen mentioned, there are efforts to finalize the AI Act with a framework that evaluates AI models against a benchmark that categorizes risks into 4 levels: unacceptable risk, high risk, limited risk, minimal or no risk. Some of those unacceptable risks Naveen mentioned, such as biometrics and those sort of issues. It'll be interesting to see how that actually plays out. You're right, all of that is already out there. There's a focus in that on transparency, accountability, and human oversight. And in the US, we've heard from President Biden issuing an order last month, an executive order, which, among other things, requires developers of the most powerful AI systems to share their safety test results and other critical information with the government. China announced a global AI governance initiative and launched rules on generative AI products. And here in Singapore, there are AI guidelines issued and best practice. I think when you're a regulator, you usually think about what's the worst thing that can happen, and you kind of work back from that. It's not the best way to regulate, but often you're thinking about risk, right? And it is clear that the dangerous capabilities from frontier AI models can arise unexpectedly. And that's always a worry for a regulator when things, regardless of whether it's financial services, telecommunications, health care, whatever area it is, if something is going to arise unexpectedly, unknowably, that's a worry for a regulator. You could say it's a worry for society. It depends on your view on risk. And that's because it's difficult to robustly prevent a deployed model from being misused. And once deployed, it can be difficult to stop a model from proliferating broadly and optimizing an outcome without control. And we've got to think about that tail risk, even if such a catastrophic risk remains speculative. And that's why, as regulators, we are starting to say, and that's why governments are starting to say, that you do need a safe framework for responsible use of the most powerful AI, and from a financial services perspective, because that's what I do, within which financial services can thrive. That said, as a regulator in the UK, I have a competition objective as well. I also just got given a competitiveness objective as a secondary objective in the UK, whatever those two things mean together. The reason why we have that is because growth and productivity are absolutely essential to the economy, and you can't, there's no point regulating an economy which isn't functioning well. And there are real opportunities from AI. And I'm speaking to investors here, so if you take anything from the rest of this speech, which is all about risks and how we're going to regulate it, take anything from this speech is do keep investing in AI. Without investment signaling that we want the opportunity from AI whilst managing the risk, we won't go very further forward. And actually, some of those risks could proliferate without the right type of investment moving forward. So, what are the opportunities and threats? And I'll focus on financial services sector today because that forms the backbone of the global economy. When we think about financial services, I'll split it up into financial institutions, wholesale, consumers, and competition. From a financial institutions perspective, AI can really help. It can enhance data and analytical insights, including anomaly detection. It can increase operational efficiency and productivity, such as, for example, claims handling, customer onboarding, improve risk management. You can get better pricing of risks, and it can support our efforts to combat fraud and money laundering. It can also help executives and board members to make more informed decisions by summarizing the vast amount of data that we come across now to a manageable list of options, avoiding choice overload and analysis paralysis. And as Karine was noting, it can help junior colleagues or junior lawyers perform better at new tasks. So the financial system and financial markets can also benefit through more responsive pricing, more accurate decision-making, and that can lead to greater allocative efficiency. It can increase execution speed and reduce costs. That can bring benefits to investors. Turning to consumers, there can be real benefits to consumers. You can improve outcomes through more effective matching of products and services to enhance the ability to identify and support customers with vulnerability. One of the things which I'm responsible for in the UK is something called the Consumer Duty, which seeks to get a higher standard of financial services for consumers. I'm really positive about things like open banking or open finance where you can use data. I'm positive, in a sense, potentially about the opportunity for AI to understand the consumer experience, get data, but it comes with risks. You can also end up making finance fun. One of the things or making anything fun. One of the issues with social media is misinformation, and the fun is more harmful than it is anything else. Can you use AI to actually understand behavior and understand how to target certain types of more helpful activity for people in financial services? That would be understanding your finances through AI. through making that chatbot not something which annoys the hell out of you because it doesn't respond to your question, but to something which really understands and responds to you. Now, even when I say that, I think, oh, that's a really crazy world, isn't it? But if I go into a branch and I speak to a bank and I've just had a bereavement and I want to sort out my executor issues, that person understanding me and understanding that situation is really important. If you can drive that through AI and that's more efficient and people accept that, what's not to like? AI can also detect nuances. We've heard of using AI to identify eating disorders without the person saying anything like, I don't want to eat, or I eat too much. Similarly, consumers may not always clearly articulate what kind of financial services they need. There's stigma around that, simply because people don't want to say what they want. AI can empower consumers. AI-powered agents can help consumers choose. It can avoid people being ripped off or tricked, and deal with providers if they aren't happy with services received. So I think AI does have opportunities to improve access. There can be benefits to innovation and competition in financial services and in all markets. In financial services, specifically at the FCA, we're exploring the use of AI to speed up our processes in detecting harm. So a big issue for us is monitoring transactions in wholesale markets, or monitoring illegal marketing to consumers, or detecting fraud. AI can really help if you've got the right data to speed up those processes. And then there's the translation effects of AI, which was kind of overlooked. But we live in a world where there's complexity of regulation, there's complexity of law, there's misunderstanding just basically on the text between different jurisdictions. And AI can really help to translate legal or regulatory requirements across jurisdictions. That can really help lower compliance costs, and it can also help global markets to develop and competition. That applies in financial services, it applies in any other sector. Okay, so I sound like I'm pretty positive and I want a chatbot running around with me like Minority Report all the time, but we do see a whole host of potential risks with AI. There are obvious areas of potential harms to end consumers, and to businesses too. I think they're similar. If misused, AI may lead to the harmful targeting of consumers' behavioral biases or characteristics of vulnerability, discriminatory decisions, through amplifying existing biases and creating new ones. That can lead to financial exclusion and reduced trust. Although I would say that machine learning in insurance has already led to certain aspects of higher prices or exclusion. So these aren't new problems for financial regulators, but they could be amplified. It might risk removing human agency and choice. So whilst on the positives, I can see lots of investment in access and bringing more choice to people. On the other hand, used wrongly, it could remove some of that. It increased the risks of fraud and scams because our current systems aren't fully equipped. So it doesn't have to do that. But if we don't invest in the detecting and monitoring, both as regulators and industry, then that could happen pretty quickly. Generative AI can create content and combine that with social media. And we're already seeing that, the spread of misinformation, tricking consumers into authorized payments, or issues in relation to our democracy, in relation to elections, or we're seeing misinformation currently in relation to some of the conflict areas across the world. One of the reasons why the European Commission is concerned about biometrics is that it can pretend to be us, posing risks to biometric authentication and bypassing security features that we think are really important in financial services, and we spent a lot of money, a lot of investment in improving them. So that's a real risk. And if you're not convinced, sorry, I didn't bring the picture with me because I'm a regulator, so we don't do slides, just in case you take pictures of them. But I would recommend Googling Pope Francis in a Balenciaga puffer jacket and see whether you can tell if it's a deep fake or not. It's a great look. The use of AI can also translate into a range of risks for financial institutions, such as risks to the safety and soundness of firms, or poor decision-making if the model used is faulty and the data quality is poor, leading to costly mistakes. And I think that's the same for most industries and most institutions. Criminals can use AI or exploit their weaknesses to conduct even improved cyber attacks against businesses. Cyber attacks are a huge industry at the moment, and those threats we deal with all the time as a regulator, effectively, privately. AI can really enhance that, and that's a major risk. And then we have these human effects in terms of the way we work. We've already had the pandemic, which has shifted the way we work. It's a delight to actually travel and meet people in person, but we had many years where that was impossible. AI at pace may cause dislocation to jobs and the way we work. So, I was a junior lawyer. I hated reading all of those documents. But if you ask me why I can read a document in 20 seconds, it's because I went through that process. We don't quite yet understand what it means for people not to do those parts of their careers and to rely on these things. And that will be a seismic shift, if it happens, as large as the Industrial Revolution. And I think as regulators and as governments, one has to think about that. But in financial markets, AI may also lead to risks to resilience and efficiency. It can really destabilize, potentially, the financial system, and that may create new risks. So models may become correlated in subtle ways, or pro-cyclical behavior may amplify market stress. And in financial markets, we always worry about herding effects. So there could be a greater risk of herding in financial markets. So this is where investors might follow what they perceive other investors are doing rather than doing their own analysis. The use of AI amplifies that risk because it's going to be much easier to purchase off-the-shelf models, meaning there might be less algorithmic diversification. Karine mentioned competition, and I think it's a favorite subject of mine, so I could go on forever. And it's not in my notes, but the Competition and Markets Authority in the UK has looked at foundation models. And I think it is important to note that the foundation, so those models and those institutions which either control the compute power or develop the best model, it will be important to think about how they are, how they are regulated. Or how they fit with regulation. Those inputs will be so crucial and critical. The price of them, the restrictions, and so on and so forth will be parts of the system that we need to look at. So what's the role of policy and regulation in all of this? Well, Naveen helpfully set out sort of his chart where you've got less regulation, more guidance, more prescriptive rules, etc. And I think it was useful to see it. My starting point with regulation is that business developed this technology, people developed this technology, businesses and individuals will use the technology. So in a sense, the best way is that if you can get rid of regulation, that's the best way, always, right? So the person who said no regulation has a point. Absolutely. I think there can be over-regulation. And that's why we usually start with principles. So what is the principle in terms of using something that's developed which could have these opportunities and could have these risks? And we do think about, slogans such as the responsible adoption and use of AI. But I do think regulators now and governments will have to fill in that slogan and start to work out both the mechanisms as well as the specifics. And as the EU has done, think about what are the risks which are acceptable or unacceptable. And there should be a debate about that. Although when the EU moves, the world usually moves. One of the ways in which I think capital can help with this and help and interact with regulation is that you are obliged to deliver value for your shareholders. And one way that you can do that is ensure that that's sustainable over time. And you don't want AI to sit in a system which is so free, so unregulated, that actually there's destruction of value because of the problems that flow from it. Adoption is not just because a business creates something, society has to adopt. And if there are major incidents which cause problems in society, then there will be calls for unadoption. Although you can get addicted to things like social media, so who knows what might happen. I think it's therefore not entirely surprising that industry is calling itself for regulation. Gary Gensler, chairman of the US SEC, even said an AI-engineered financial crisis was nearly unavoidable without swift intervention. I'm not sure if we necessarily are at that stage, but I can see all of the mechanics there to make that potentially a possibility. So there is a role for us to shape policy and regulation, and it's important that we do so. I think what regulators can do, and what the Bletchley Park Summit has asked the world to do, is to create an environment of thought leadership and thoughtfulness in the system. I can't provide services to firms or consumers. I probably wouldn't be very good at it. And I don't pick winners and losers. But I am here to ensure competition is fair, that the system makes sense, and to create the right incentives for behavior in the system, for responsible behavior in the system. And what we want to do is provide greater certainty in financial services for financial institutions to make the right commercial decisions, and then to allow the flow of capital to sensibly move in the right direction, and then allow that investment capital to seek promote productive growth, which is what we need in the global economy. And that will benefit consumers, that benefits all of you, and businesses who rely on financial services. I want to say a few brief words on how we're thinking about conceptualizing the regulation of AI and this is through what we describe as data, model, and governance. First and foremost, there's the data, and Karine talked a little bit about this. If you take anything from this, the biggest problem, I think, for us in terms of AI in financial services, could be in other industries, is that I still find companies in the financial services system which have a lot of paper. They haven't put that paper into any system. And one of the challenges is the output of using AI can only be as good as its data. In other words, garbage in, garbage out. There could be an uplift, and investors need to think about this, in investing in improvements in the use, storage, integrity of data quality, before people can really benefit from AI. And I think that's an important issue. But what we think people need to consider is data quality, data privacy, data infrastructure, and data governance. There are obviously potential problems around data bias. AI model outcomes depend heavily on accuracy of data inputs and will carry bias if the input data is wrong or skewed. But it doesn't mean AI is necessarily more biased than humans. It wasn't long ago that unmarried women were routinely turned down for mortgages in the UK. And there are tales that bank managers rejecting customers' loan applications if they dared to dress down for the meeting. I wouldn't have got a loan without a tie many years ago in the UK. There are also issues around privacy, where personal data is used to train AI models, and the extent to which developers are truly able to separate and remove that training data that has personal information from a trained AI model, and that cuts across all sectors. And then, of course, there's, as I mentioned, the security of that data infrastructure. That will become increasingly important as we move forward. And I think investment in those sort of spaces might be, you might make a return actually on that. Regulators can play a critical role to unlock the potential of data too, by creating a safe and responsible framework for data sharing to train AI models and allow AI models to deliver benefits. So that's why sandboxes can be really important. They can allow the interaction of regulation and data. You can have synthetic data in those sandboxes, so you can work through how AI will work. This is already happening. At our gateway, so that's where you come to get authorized and licensed in the UK, we are seeing AI models all the time. It was already coming through the system, and we're having to work through what we think about those AI models. There should be safeguards around the models, the validation of them, the review processes, and as we've just started discussing, and I can't wait to hear the conversation if I'm allowed to stay later, is that AI systems are dynamic in nature. As a regulator, you always want to go from point A to point B, and how you get to point B, you want to know what happened at point A. I mean, we've got to start accepting that that's going to be more nuanced as we move into AI. I don't think we are accepting it, actually. We'll still hear validation, you need to know why this outcome has happened, etc. Somehow, and Naveen, I'm really taken by your comment earlier about real-time regulation. Somehow we need to find a different model which works for a system where the benefits of allowing AI models to work are not outweighed by our worry about the risk of things going wrong. I don't have the answer to that question, but I know that we are thinking about it. I mean, there needs to be some traceability between inputs and outputs, but how much understanding is going to be enough? To make a cup of tea, do you just need to know to boil the kettle and pour the boiling water over the tea bag in a cup? Do you need to understand the exact path each water molecule takes after being imbued with energy that passes through the pores of the cloth of the tea bag, extracting flavors from the tea leaves in the process? Or do you just need to know the scientific concepts behind it? And then, if you're using a model from a third party, there's a risk to you, especially in financial services. We expect you to understand your models, understand who you outsource to. Do you understand the model that you're buying and using? So finally, the governance accountability framework. And Corinne mentioned this, and I thought yours is better than what I have to say. So go with what Corinne said, and I'm going to copy it. But this is basically about procedures, clear accountability, effective risk management across the AI life cycle at various levels of operations. Just one thing from a regulator's perspective, we always want, at least in the UK, we want to know the person who is responsible. So we want an individual. In fact, we have a senior management function. We developed that. It's been copied across the world. We have the chief operations function, which is responsible for technology, SMF something or other. And we have a chief risk function for risk management. Firms say to us, we want one for AI, we want one for technology. And I say, yeah, we'll get one. But the problem is, as I said before, what are they validating once we open the box? And how do they validate? How do we hold them accountable? And how do they understand what's going on? And I think that is one of the key questions the boards will have to work with. I will leave you with that. I think regulators need to work with capital, with investors, with businesses to take the opportunity of AI whilst managing the risks. And I thank you all very much for listening.